Okay. Good day, audience. This is Mustafa Mirchawala, your trainer. Uh, Today's class objective is to discuss the F7 FR financial reporting paper orientation. Okay, so that you come to know what's in this paper and what's the strategy to clear this paper. I'll discuss things in detail, inshallah. Right? Okay. Now, first of all, let me introduce myself. I've been teaching for almost last 18 years, and I'm the CEO of Mirchawala's Hub of Accountancy. This institute is based in Karachi, Pakistan, but we have operations worldwide. Our online operations are almost in every country, and we are teaching in English language as well as Hindi language, two languages we are offering till now. Okay, and myself, I teach all financial reporting papers, right from the basic to the advanced, like in ACCA for F3, F7, FR, SBR, strategic business reporting, also ICW corporate reporting, right? Okay, F6 taxation I teach, right? These all are my papers. I also do corporate training with different IFRS training with different multinationals, right? And I'm also a vlogger, sometimes makes videos for the development of students. And alhamdulillah, in past 15 years, many of my students not only scored nationwide positions but also worldwide position. Let me share a document with you. Let me share my position document with you. You can have a look. See, these all are the position. You can see these are F3 positions. These are taxation C. All these are taxation positions. This is FR, this is SBR. Even foreign students, also our online students, score positions. Like, see, you can see Saudi Arab top many times, Saudi Arab top, right? And worldwide positions as well. So the journey is going excellent, and I hope you guys also take full advantage of this teaching and you follow all our instructions which we are going to give you, right? Okay. So first of all, financial reporting is the continuation. F7 or FR is the continuation of F3. Means first students do this paper, F3, then FR, then SBR, and then P7. P7 is basically AAA. P7 is AAA, right? So this chain is connected. This chain is connected. So if you want to excel in SBR and P7, you must have good grip. You must have excellent grip in F7 or FR, right? Okay. And if you want good grip in FR, your basics should be strong. Your basics of F3 should be strong. But my teaching style is I start things from scratch. So in FR paper, there are some standards which are also, you studied all those standards in F3 as well, like IS 10 events after the reporting period. They are like IS 38, IS 37. These were also part of F3, but I'll teach these standards from scratch in this course as well. Okay, so don't worry about it. Now, what's the pass rate? What's the pass rate of F7? What's the pass rate of F7 FR paper? March 2020, I'm just giving you just two passing rates, and then I'll tell you the average. March 2020, the passing rate was 44%, and for December 2019, it was 47%, right? So the passing rate, normally FR passing rate falls between 45 to 50%, which is very good, for a professional qualification like ACCA, right? Okay. And normally this passing rate is highest in part 2 in skills module. If you compare with other papers, there are papers like F5 PM passing rate is 30% or 35% something. F8 AA audit papers passing rate is almost 38% or 37%. So comparatively, financial reporting passing rate is excellent. Okay, so that's an opportunity for you to clear. And normally that's why, because of this good passing rate, normally students opt this paper as the first paper, as a first paper of skills module. Means after completing part 1 ACCA part 1, their foundation level, they directly opt F7 financial reporting paper because of the good passing rate. Okay, right? One more thing I would like to add, because of this paper will be helpful for you in the audit firm as well. So those who want to join audit firm or finance department of any company, so they should also have a good grip in this paper, FR paper, right? This paper will help you practically in your real life, right? Okay, because we are going to study IFRS in this paper. Now the question is, what's the paper format? The paper format is section A, total 100 marks, and there are 3 sections. Uh, 15 MCQs section A, there will be 15 MCQs, 2 marks each, and this is total 30 marks. Now the question is, sir, from where will we get this area from anywhere. It's a mix area. The examiner may give question from anywhere, consolidation, IS, ratios, any area they can give, no fixed area, no guarantee for this, right? Okay, now second area is section B. In section B, you will have 3 OT cases, objective test questions, 10 marks each, that is 30 marks. Now, hope you remember the OT cases, like in F3 paper, last 30 marks. Just think over it. F3 paper, last 30 marks. OT case is like a scenario based question with 5 MCQs. Each OT case is a case with 5 MCQs or 5 boxes, 5 MCQs or 5 boxes, right? Okay. Now, do keep one thing in your mind. OT case are very dangerous, because if in OT case there are 4 options and you have to tick true and false. If in any OT case, listen to me very carefully, if there are in any question there are 4 options, then you have to tick true and false, and if you do one mistake you will get 0. So it's like gambling, win or lose. You will lose everything. If you do mistake in OT case, you will lose everything. Okay, so be very sensitive while doing OT cases. So now the question is, sir, what comes in OT cases? Normally they test IFRS. Okay, in the recent attempts they have tested IFRS 15 in OT cases. They have tested IFRS 16 leasing in OT cases, right? Okay, so normally this area comes from IFRS. Now, section C. Section C is constructed response area, or sometimes we call it constructed response questions, CRQs, right? Okay. Now, in section C, you will have 2 questions. In section C, you will have 2 questions at the rate 20 marks each. At the rate 20 marks each. So that means 40 marks. Now hold. See, 30 marks. 30 marks you can see from section A. 30 marks from section A, 30 marks from section B, and 40 marks from section C. This makes 100 marks total. Sir, is there any choice in the paper? There is no choice, my dear student, no choice. 100 marks are compulsory marks. You cannot leave anything. Okay, now from section C, which areas comes from section C? In section C, you may get, first of all, final account question. Of 20 marks. Now, what is final account question? Wait, I hope you remember F3 company accounts. In F3, when you guys were doing company accounts topic, so your teacher used to teach you like this: there is a trial balance given and few adjustments are given. But to be very honest, in F3 level, the adjustments were like very simple. Like, wait, example, closing stock is equal to 40,000. This is the adjustment. Machines are to be depreciated at the rate 20% on cost, right? Bad debts of 20,000 is to be written off. These were the kiddish adjustments you guys used to study. Very basic adjustments you guys used to study in F3. But here in F7 paper, in FR paper, not only look at me, you will get the trial balance as well. You will get the adjustments of IS IFRS. Like in adjustment number 1, you may get IS 16, adjustment number 2, IS 37, adjustment number 3, IFRS 15. So basically here you will get, in final account, you will be tested with advanced accounting standards. So in F3, it was very basic. F3 was nothing. It was piece of cake. The depreciation adjustment, 20% on cost, 20% reducing balance method. That was very, very basic level. But in F7 level, the final account will be of good level. Okay, so you will have a full test of IS IFRS and final account. Now wait, traditionally years back, final account question was like that the trial balance is given and there are 5 adjustments are given. Trial balance is given and 5 adjustments are given. So you need to make SOCI, that is income statement. You need to make SOCI and SOFP. This was the simple requirement. But with respect to time, now the latest questions are from profit reconciliation. Means accountant has already made income statement in the question. Accountant has already made income statement in the question, or accountant has already calculated. Accountant has already calculated the profit, but that profit is wrong. So what you have to do, you have to start your journey from unadjusted profit, or you have to start your journey from uncorrected profit, and then you need to adjust, add or less few things, and then you go to corrected profit. Okay, so now the new questions are like that, in which you need to correct errors as well. You need to correct certain mistakes of accountant as well. This is the latest fashion. Okay, so in CRQs, the last section C, final account may come. Number 2, consolidation may come, right? 20 marks. And consolidation is again very important. Just like in F3, hope you guys remember, in F3 you will have 15 marks. You will have 15 marks, compulsory 15 marks for consolidation. Compulsory. Variable marks were also there, but fixed 15 marks for consolidation in F3 is there. Here you may get a complete question of 20 marks of consolidation, complete 20 marks consolidation here, right? Okay, let me give you a little introduction of consolidation. Hope you remember the consolidation. Listen, this is parent company and this is subsidiary company. This is parent company and this is subsidiary company. Okay, now parent company wants to buy running business. Parent company wants to buy running business of S company. Okay, so when one company wants to buy running business of another company, they normally do it through ordinary shares. So when one company acquires, see this, look at the screen, when one company acquires 50% plus ordinary shares of another company, that means that company gets the control of another company. That company gets the control of another company, right? Okay, so that means now parent company has taken over the control of S company. Now P company is called parent, this S company is called subsidiary company, and their combination is called group of companies. Group of companies, right? Okay, and this is very common now in this world, that there are many entities, they are parent company and they hold different subsidiaries. Even this is also possible. That parent company is in one country and the subsidiary company is in another country. That's also possible, right? This is very common nowadays. But once again, this is not part of the F7 course. That is foreign subsidiary consolidation is not part of F7 course. That will be tested in SBR. Now, hope you remember when you were kids, when you were F3 student, so you might have studied this P2S sales, S2P, intercompany sales of inventory between parent and subsidiary and parent. So these things are also tested here. Plus, in your F3 basic level, you guys just studied the inventory exchange, P to S and S to P sale of inventory. Here you will have to study P to S and S to P sale of fixed asset. Here you have to study P to S and S to P sale of fixed asset. P to S and S to P sale of fixed asset as well. P to S and S to P sale of fixed asset as well, right? Okay. And there will be a lot of theory in consolidation like IFRS 10, IFRS 3 that we will also cover in this consolidation area, right? Okay. Now, so in section C, you may get final accounts 20 marks, or you may get consolidation of 20 marks. One more area, you may get ratio analysis, that is interpretation of financial statement. And what I have written, see, I have written here very important, I have written 3 times, very important. This ratio analysis is very important here. Now many students think that we have already done ratios in our A levels or O levels. Even you guys have done ratios in F3, you guys have done ratios in F2. Even those who have done PM, performance management paper, in performance management paper there are ratios as well. So this is very common. So people think that we have already studied this area, but the answer is no. Here the ratios are different. F F7 level ratios are little bit advanced. F7 level ratios are little bit advanced. They are different. F7 level ratios are little bit advanced and they are different. Okay. Let me give you some examples. Right now I'm not teaching any ratios. I'm just giving you idea. That how you are going to study, how and which type of questions you may get, in ratio analysis. Okay, let's have a look. Now listen. Now you will be accountant. You will be accountant of parent company. In the questions, in the ratio analysis question, my dear students, you will be accountant of parent company. And just imagine that parent company is very rich company. It's full of cash. And parent company wants to acquire this running business of X company. Parent company wants to acquire the running business of this X company. Parent company wants to acquire the running business of this X company. Okay, look at here. So whenever you want to buy running business of X company, so you will go to the existing owners, Y group. These are the existing owners of X company. I repeat, parent company right now planning to buy running business of X company. So obviously they will buy from the existing owners. They will buy this X company's business from existing owners, and existing owners are Y groups. A Y group of companies are existing owners, right? So now, look at here, before buying anything, just like if you want to buy a car, if you want to buy a second-hand car, so obviously you check it, you check the engine, you check the paint, you check the denting, you check all these things, that is that car is okay or not. Before making such a big payment, we always check whether we are getting the right product or not. Yes, same is the case here. As we are going to pay millions of dollars for this running business, as parent company is going to pay millions of dollars for this running business, so obviously parent company will check this company in detail, whether we are buying the right company, whether we are paying the right price or not, whether are we going to pay the right price or not. Obviously parent company will check. Now let's have a look at the problems. This Y group is the seller. Now this Y group is the seller of X company and P company is the buyer. So now apparently this X company looks highly profitable. This X company looks highly profitable. And you know why this company looks profitable? Because there are many family transactions. There are many family transactions. Let me give you a few examples. The first example, let us say This X company makes tube lights. This X company manufactures. This X company manufactures tube lights. This X company manufactures tube lights. Okay. So for tube lights, the raw material is glass. So they used to buy glass from the Y group of companies, the same group. They used to buy. They used to buy glass from the same group of companies. Now, as they all belongs to same group, so they are getting these glasses on 20% discount of the market price. They are getting the glass on 20% discount from the market price. Okay. So when they are buying the glass on discount, that means their costs are lower. Their costs are lower. That means their cost of sales are lower. So obviously the profitability is higher. The profit is higher. Okay. That's why this profit is looking artificially higher. But just think, once parent company buys this X company, once parent company will acquire this running business of X company, so this X company will no longer be part of the existing group. This X company will no longer be part of the existing group. So there will be no more discounts. There will be no more discounts. Just think. So that means the future profitability will be in doubt. The future profitability of this X company will be in danger. So before buying, you need to check all these things, that whether there are family transactions in the group or not. This is the first thing. Number two, right now parent company is not the owner of X company. Please look at me and be very active. Right now parent company is not the owner of X company. Right now the owners are these people, Y group of companies. So these owners, these directors has given interest free loan. These directors has given interest free loan to X company because they are owners. Owner may support his own business. That's very natural. So directors has given interest free loan to X company. Okay, because they are owners as well. But once we'll buy X company, then that loan will be repaid, and then after that you need to take loan from market. After that you need to take X company will need to take loan from the market, and when X company will take loan from the market, X company will have to pay market interest rate. So there will be additional cost after the takeover. There will be some additional cost after the takeover. Are you getting? So before takeover, the picture is different, and after takeover, the picture is different. So now you need to be very carefully and you need to comment it very carefully. Third thing, just I'm giving you ideas that how in practical life how you deal with situations. You are buying a company. You are buying a running business of company. There may be possibility, there is a possibility that business that exists, that X company is dependent on employees. That X company is highly dependent on few employees, like hospitals. We have seen many of such hospitals I've seen many of such hospitals. Those hospitals are dependent on doctors, specialist doctors, that almost 60, 80% patients comes on the name of few doctors. So if you have acquired such a business which is dependent on the name of employees, and what if those employees run away after the takeover? What if those employees run away after the takeover? So that will be a total loss, total disaster for us. Are you getting? So before that, you need to check it. Before takeover, you need to check it. Same, one more thing. You need to check whether are there any cases or any disputes or any obligations on this X company. So you need to settle it before it. You need to check all the court cases and all these things, whether this X company has any obligation or not. So my dear student, takeover is not an easy decision. It's a big decision. So here in F7 level, normally examiner gives such questions. in which you are the accountant of parent company, and you have to guide your parent company, you have to guide your employer that whether this business is lucrative or not, whether they should go for this business or not. So there are many other factors as well. I have just pointed out few of them. I have just pointed out few of them. Okay. Are you getting my words? Please write on the chat box. Write on the chat box, please. All of you, please reply. Okay. Now, similarly, there will be lot of comparability issues. There will be lot of comparability issues. There will be lot of comparability issues. For example, just think. This is 1st January 2018 to 1st January 2019. Last year, parent company was single company, alone company. Parent company had no other subsidiaries. Parent company had no other subsidiaries last year, right? But this year, see, this year, parent company acquired S company. Parent company acquired the running business of S company. So just think, this year you will be given group accounts. This year you will have the accounting is combined, parent plus subsidiary. This year the accounting is combined, parent plus subsidiary. And the last year there was only single parent company. So now if you compare the last year result with this year, if you compare the last year result with this year result, there will be comparability issues, because last year there were only parent company, but this year parent plus subsidiary, this year parent plus subsidiary, right? So these things, these are very many small points which you need to identify, and comment on it, which you need to identify and comment on it. Okay. Now, one thing I always say to my students, that computing ratios is not a big issue. Ratio analysis calculation is not a big issue. The real issue is the commentary. The real issue is the commentary. The real issue is the commentary. The real issue is the commentary, right? I have one more very good example. Let me share with you. Let me share. See this. Such questions also come. For example, now listen. There was a hospital in which there were four specialist doctors last year. Okay, there were four specialist doctors last year, right? And this year, at the beginning of this year, please listen my example very carefully. At the beginning of second year, one of them left. One of that specialist doctor left. He left for Canada. Let us say he left the country. He left for Canada. He moved out to some other place. Okay. So now three doctors are left. Three doctors are left here. Now wait. And in the question it was written, there was a significant fall. There was a significant fall in profits in this 1 year. There was a significant fall in profits in this 1 year because of this doctor. Now, as this one doctor left the company, the other three doctors started crying. The other three doctors started crying. Just listen to the story. That the profitability went down because that doctor leave. The profitability of the company, the profitability of the hospital went down because of that doctor. But you know what's the reality? The inside reality of this story was these three doctors had their performance also down. Their performance also went down. So the reason of the profitability downfall were these three doctors as well. So now wait. If you compare this year result, see this year result with last year result. This is not compare. This is not like with like comparison, because last year there were four doctors. Last year there were four doctors, and this year there is only three doctors. So now, if you want, open your eyes, the real dialogue I am going to say. If you want to check the real performance, if you want to check the real performance of these three doctors, what you do, you will go in the last year accounts, and you will subtract that one doctor results. That one, you will eliminate that one doctor result who left. Okay. So now the three doctors results you have in the last year, you will compare it with the current year three doctors result. You will come to know the real decline in the performance. You will come to know the real decline of profits of these three doctors, of performance of these three doctors. So this way we do analysis. This way we do analysis, and this is very interesting analysis. Now, one more thing. One more thing. I have given you these examples. I have given you these examples on doctors, but in real exam, my dear student, in real exam, you get in real exam you get questions with divisions. Last year there were four divisions. Last year there were four divisions, and this year we sold one of them. This year we sold one of them. This year we sold one of them. Okay. Did you understand this point? Write a comment, please. If you understood the point, please write in the chat box. Now, students, listen one thing. I always recommend in my short videos, my long videos, my normal class, that always read examiner report. After each and every exam, examiner publishes examiner report. So it's my blind recommendation for all of you audience, that read the examiner report. By reading examiner report, you come to know what are the basic mistakes, what are the famous mistakes students do while attempting the questions. So let me share one example. Let me share one example with you guys. It came in the latest paper, and some students did this mistake. And if you do this mistake, that means your impression will be zero in front of examiner. Examiner will come to know that you guys haven't studied. Now wait. In the question, it was written, see, this is 2018 and this is 2019. Look at here. Last year, inventory was 5 million, and now it is $7 million. Okay. So from the SOFP, it was clear that the inventory level has increased. Now, wait. What you have written in the question, you wrote in the commentary that company is not able to sell goods quickly, or the sales are not going good, like this. You have written this comment. Listen, I repeat, after looking at the inventory levels, the last year inventory level was 5 million. This year it is 7 million. Last year the inventory level was 5 million. This year it was 7 million. It was 7 million, right? So after looking these inventory level, after looking at these inventory level, the inventory increased by 2 million. The inventory increased by 2 million. You wrote that company is not able to manage the inventory and company is not able to sell the inventory without, now you wrote this in comment, without looking at the actual sales. In the income statement there was a drastic increase of sales, like 3 million last year, and this year sales is, let us say, 6 million. This is 18 and this is 19. So just think, you contradict with the question. You have written in the commentary that company is not able to sell good, without looking at the income statement, that in the income statement the sales has actually increased. So this, if you do such mistake, if you do such blunders, then your impression will be zero. Examiner has said, we quickly understand that this guy has just learned the commentary. This guy has just learned the points, learned the commentary. We don't give any marks, and we consider that guy is very low level guy. That means this guy can't work practically. This guy can't work practically. And you know the objective of these papers, the objective of these papers to prepare yourself, the objective of these papers to prepare yourself for practical life. Okay, so be very careful and do read the examiner report. Even majority of my position holders, after scoring position, I sometimes ask students, what did you do? So they do many things, including the reading of examiner report as well. Okay, so don't forget. So now let's come to the question again. Now after ratios, you may get a question of SOCF, statement of cash flow IS 7, statement of cash flow IS 7. Okay, so I hope you remember statement of cash flow. Statement of cash flows, there are three activities: operating activities, investing activities, financing activities. Operating, investing, financing. Operating, investing, financing activities. Okay, so these are the three activities for which you have to work out. But nowadays, for last, I'm telling you about last 4 or 5 years, this topic is out of fashion. Out of fashion means normally the feedback of student is that normally it's not coming in last 40 marks, but sometime OT case of SOCF came, right? Sometime with final account, they give you 8 marks or 7 marks to make the cash flow from investing activities or cash flow from financing activities. So yes, it's part of course, but looks like it's out of fashion. But in professional exam, you can't skip anything. So definitely we need to give time for this as well. Definitely we need to give time for this as well. Okay, right? Now, don't forget that for in this 100 marks, for first 60 marks there is no presentation. For first 60 marks there is no presentation, but for last 40 marks, yes, you have to present. You have to present in a spreadsheet. There is a software, there is a constructed response area available in accaglobal.com. You can practice there. Even you can practice for some questions, you can practice in Excel, but I don't recommend Excel. You should go in the constructed response area and solve it. You should go in constructed response area and solve these questions. Okay, so in examiner report it is written that do practice this area in software, so that on the exam day you can perform easily. On the exam day you perform easily. Now some people think that this is very difficult, that from paper based to computer based examination, this presentation is difficult. It's not difficult. It's not difficult, I'm telling you, because the shift is towards technology. The shift is towards the technology. The use of technology is increasing now. Okay, so now with the use of technology, with the adoption of technology, my dear student, we normally go for high speed. So yes, this may increase your speed. This may increase your speed. This may increase your speed, my dear student. Are you getting? One more thing. In all, in my life, I've attended many times examiner sessions or teachers training sessions or marking sessions. I've attended many times how to mark a paper. This is very common. You know, listen, the one of the major reason for failure is, let me write, one of the major reason for failure is poor handwritings and poor layouts. Poor handwritings and poor layouts. This was one of, in past, this was one of the major reason for failure of students. I'm telling you, I have attended such sessions. But thank God, now there no more handwriting. Now no more handwriting thing. No more handwriting thing here, because you need to type. So you can save yourself. But yes, the layout is still there, that how you work, how you give headings, how you underline it, still the layout thing is there. But handwriting, no more handwriting. Okay, so that's a good news for you. But one thing, you need to increase a little bit typing speed. Your typing speed should be little bit better. Okay, and this, how you can increase? By practice. Typing speed you can get through practice. Okay, so that's not a big deal, not a big deal. One more thing, let me give you one example. When you guys used to do manual working, see, for example, this is your income statement, sales, cost of sales, GP, blah blah blah, profit after tax. This profit after tax goes in SOCI, statement of changes in equity, right? And then finally in SOFP. Okay, finally the retained earning figures goes in SOFP. I repeat, first of all you make the income statement. Sales, cost of sales, gross profit. I hope you remember this all. And then you calculate profit after tax. This profit after tax goes in statement of changes in equity, and then the closing retained earning figures goes in SOFP. So it's all connected. Now go back 4 5 years, go back, when there were no CBE papers, when there were no session CBE, there were only paper pen. Look at here. So let just think, you have solved a question, and then after solving the question, you came to know that there is a mistake in sales figure. After completing the whole question, you came to know that there is a mistake in sales number. So now what you guys used to do, you have to change the sales number, and when there is a change in sales number, your gross profit will be changed, your profit after tax will be changed, your SOCI number will be changed, and your final retained earning will be changed. So in past you need to correct all these. But good news is that right now no such things. Because when you do, I hope you remember, you have a little knowledge. I expect that you have a little knowledge of Excel or little knowledge of spreadsheet. So in the spreadsheet, look at here. In the spreadsheet, if you correct the sales number, automatically this is also connected. This is connected. Just correct the sales number. Everything will be corrected in seconds, immediately. So this is all time savings. And this is the best use of technology. Are you getting? Hit a message, please. Hit a message, please. If you are getting, hit a message. Okay. One more thing which I want to tell you right now as well, and I'll tell you when I'll teach the Excel. You know, if you have seen Excel if you have done Excel in your life, or if you have used a spreadsheet, so just think, this is a sales number and this is the cell of Excel. So normally students ask, sir, can we do calculation on calculator? Can we do calculation on calculator and we write the ready-made number? We write the ready-made number. Yes, you can do it. But if you want to do it, then show the working here. For example, 5,000 multiplied by 2 divided by 3. This is the working you have shown, and then you do it directly in the cell. But if you are not showing this working, if you are not showing this working on the sides, then you have to apply the formula 5,000 multiplied by 2 divided by 3. Then you have to apply the formula. I hope you remember how to apply the formula. Okay, so one of these things you have to do. One of the, either write on in the working side, or solve or apply the formula in the cell, okay. But if you miss these two things, you haven't done this and you haven't done this as well, you just write the direct number by using calculator, then you may lose marks. Don't forget this advice. And this is also written in the examiner report. Now, these all IS IFRS are included in your course. See the screen, please. IS1, IS2 inventory, IS7, IS8 changes in accounting policies, changes in accounting estimates, prior period errors. Then IS10 events after the reporting period. This you have already done in your F3. In this you have done in your F3 exams, but don't worry, we'll do it here as well. IS16 you have done in F3, and there is some advanced portion of IS16 as well here, the revaluation side. Then IS37 you have done in F3. IS38, okay. A little bit of IFRS 15 you have done in F3, right? Okay, so but don't worry, we'll be revising it. Plus this framework theory you guys also did in F3, but still these all things are part of your course and they are examined on routine basis, so we cannot take any risk. That's why we cannot take any risk. Okay. Now these standards, wait, let me highlight. Wait, these IFRS 3 and IFRS 10 is linked to consolidation, and that these standards we'll cover in the consolidation side. These standards we will cover while doing consolidation, okay, right? Now, what's our strategy? How we are going to cover this course? Look at me and listen. First of all, we'll start our topics with IS IFRS. Okay, we'll do accounting standards with some past papers, exam kit, and OT cases, all accounting standards. This will take a lot of time. Obviously, there are many standards, right? But one thing which I always instruct to my students, and I make it compulsory, and I have seen a big benefit from this strategy, that after completing each and every standard, you have to read the book. Of that standard. You must read the book of that standard. That is compulsory in my class. Now some students say, sir, what is the need of book reading? Your lecture is enough. You just give us short notes. No. Sorry. Let me give you answer. You know, The Kaplan and BPP are official content providers. Kaplan and BPP are official content providers. They are UK based. And in every examiner report it is written. In every examiner report it is written. Look, listen my words. Use official content providers material. Use official content providers material. Use official content provider material. It is written. It is written in each and every examiner report. So official content providers are Kaplan and BPP. And I would like to recommend you Kaplan study text. Why I'm recommending you Kaplan study text? Because the language of Kaplan study text is easy to understand, is easy to grasp, right? Okay, it's not that much difficult. And in each and every page of Kaplan study text there is one thing: test your understanding, or additional text, expandable text. So they try to explain you with easy examples. So for IS-IFRS, book reading is compulsory. Why book reading is compulsory? First of all, if you read Kaplan book, that means you are doing everything 2 times. First of all, you will study from me, and then you will study from Kaplan study text. So that means you are doing everything 2 times. So this will give you more grip. Number two, when you read the study text, you find new questions. When you read the study text, you find new test your understanding short questions. So this will give you more grip. Okay. Plus, if you want to score good in OT cases and MCQs, so book reading is very beneficial, because there is a lot of theoretical discussion in book reading as well. Okay, so please students, do follow the instructions. Whatever instruction is given to you, do follow it, because I've shown you the history, I've shown you the positions and all the students feedback. This is all for those students, those who act upon my advice, those who follow the instruction. Okay, right? Now, then after IS and IFRS, once we're done with IS IFRS, then we'll start final accounts. What is final account? Final account is final account is again the revision. Final account is again the revision of IS IFRS. So whatever IS IFRS you have studied, you will again revise it in final account. Okay. So this is the first section of our course that is full of IS and IFRS. And and final accounts, we'll also do Excel questions as well. Then we'll start consolidation. Consolidation is a very good area, around 8 to 9 classes, non-stop 8 to 9 detailed classes. Okay, with practice. Then we'll shift to ratios and cash flow and the framework theory, and that's how we'll end the course. And I will also provide one thing. After the end of the course, I'll provide you the revision days. Of these course. Okay. And one very special service we give to all our students, and that is recommended by the ACCA body. Even the ACCA body, the regulator, is very connected to us, and they're on routine. They ask these things. If you want to increase the passing rate of students, take routine tests, just like in school, just like in college. You guys used to give tests. Here you have to give tests. We have our active testing department, plus in our LMS, our learning management system. Now we have already almost our testing app is ready. So how you will do it? Let us say, first of all, I have taught IS 33 to you guys. So after the completion of IS 33, you will contact our testing department. They will send you the test. You will solve that test, and you'll send it back to the testing department. They will give you feedback. So that means if there are 20 lectures, you will 20 topics, 20 IS, you will be tested 20 times, right? So that's very important. That's very, very important. And believe me, this also affects your result. And in this way, you can go with the class. In this way, you can go with the class. Okay. So testing is very important, and don't forget to give the test on routine basis, right? Okay. Are you getting? I hope you remember this thing. This is in our course. There are IAS and IFRS as well. IAS stands for International Accounting Standard, and IFRS is International Financial Reporting Standards. Both are applicable in this world right now. Both are equally applicable, right? But what's the difference? The IAS are the standards launched before 2001. and those new standards, they are after 2001 are IFRS. New standards which are coming after 2001 is IFRS, and before 2001 the standards which are launched before 2001 were IAS. But still these IAS and IFRS both are applicable and both are tested and both are in our course. Okay, so we are going to do it. We are going to do both of them. We are going to do both of them. Okay, are you getting? Okay, one more thing I would like to share, that I have calculated my own passing rate. Even in my country, in my Karachi, our ACCA Pakistan normally gives out the passing rate teacher wise. So Alhamdulillah, from last few years my passing rate is, average passing rate is 80%, and it exceeds the global passing rate. It exceeds the global passing rate. But again, that's because the students read the book. That's because the student follow the instruction. That's because the student take regular classes. Okay, so whatever I have told you, if you act upon it, so you will be in these 80% people. If you don't act upon it, you will be the residue, right? Okay, now let me share you the contact details. My WhatsApp number is 0092 300 2555 744, right? And this is the number of our admin department, Mr. Ansar and Mr. Hussain. Okay, so these are their numbers. If you want to write, you may write or you may contact. And those who are attending the class, they should also contact me after the class. Okay, so that I'll tell you about the next class and what's our strategy onwards. Okay, so now let me finally summarize the documents which you must have for the class. By Kaplan exam kit number 1, Kaplan study text, and there is one more book, my book, which I'll provide you guys in the form of handouts, or that's my responsibility. But you need to buy these two. You need to buy these two, Kaplan exam kit and Kaplan study text. Okay, right? Hope you understood everything what I taught you. So inshallah, we'll from the next class we'll starting the international accounting standard. So guys, don't don't miss don't miss. Yes, I'll share the slides, don't worry, I'll share the slides. Don't miss the next class. Okay, and WhatsApp me, those who are attending the class, kindly WhatsApp me after the class so that we can proceed further. Thank you, have a good day, take care.